All right, hello, ladies and gentlemen. This is welcome to sorry. All right, welcome to Portfolio $2,000 Cash Flow live with I'm Possible Terence. All right, it is Friday once again, and let's get quickly to our portfolio so that we can see what can be done and how we can generate more cash flow, right, for our portfolio. Okay, right now. So let me get my welcomes going over here. If you are with us right now, drop a note, say hello. All right, hi, Constant. All right. Sorry. And hello, Eileen. All right. Thank you for dropping your hellos over here. All right. And all right. Now, for those of you who are joining me right now, okay, if this is your first time, all right, look at the banner. Right. And the banner says www.streamyard.com/Facebook. Right. Go over to that page. Right. You'll see a Facebook banner over here. Right. Click on it. Right. So that you will approve the streaming software that we're using for this live stream. All right. And when you leave comments, all right, I'll actually be able to see your profile. Yeah, okay. Otherwise, all right, you're just gonna appear as Facebook user. All right, good, and everything seems fine. All right, hello Susan, hello Wiki, hello Maudrine, and hello Anthony. All right, now, so let me quickly get my session started. And before I do so, all right, I still need to put up a disclaimer, all right, that, okay, I will be discussing live trades that I'll be looking to put, all right, or analyze into my own live accounts, right? This is a live portfolio. This is a live portfolio that I'm building together with all of you, right, during this Friday session. All right, okay, now, so please be aware that all forms of trading bears a risk of loss, right? And by no means anything I say today is any form of recommendations to trade or to follow suit right? Please make your own judgments, right? Do your own due diligence before following any of these trades into your own live accounts. Yep. All right, now, so with that out of the way, all right, I do want to get the session started today. All right, and I'm going to kick things off, right, with our market updates. And I do have something very interesting to share with all of you today. All right, now look, ladies and gentlemen. All right, this is the same SPY charts that I'm showing all of you week after week after week. All right, and this is my analysis right now. I did say, all right, it is in this downward channel at the moment. All right, and look what happened over the last few days. All right, it reached the peak, all right, of this downward channel resistance. Right, it just kept trading along this resistance line. All right, now, so what happens over here is it may be a sign of consolidating energy, right? Because we did have this strong gap up, right? Okay, now they may be consolidating energy for the next burst up, right? So we may see the index burst out of this downward channel resistance, right? It may happen, and if it happens, we should see a run, right, of all the way to 3,870. All right, now I do say there's a chance, right? I'll explain further to all of you, okay? All right, now, so I do think there's a chance for that to happen, right? But if it doesn't happen, right, we may see this trade back towards the lower end of this channel. All right, okay, now, and the lower end of this channel right now sits at around 3,500. Yeah, okay, now, so the market has potentially 200 points to drop, right, before it finds the support, right? But of course, right, there is a support over here at about 3,550 as well. All right, now, so that's the aim on the downside. Yeah, okay, but I do think, right, that we may present an upside opportunity, right, for the first reason, because on the daily charts, right, this two down moves over here, the lower low, has actually given us a divergence, right, and not just that. Okay, now, if I switch over to a longer term time frame, right, which is a weekly chart, all right, now, something that you should be cheering or be positive about, which is also from this low, right, to this new lower low over here, right, we have the same positive divergence, right, on the RSI indicator, right? So both the daily charts and the weekly charts are actually showing us, right, a positive divergence, which means the strength lies in the direction of the indicator, right, which is sloping upwards, right? So we may see some strength coming into the markets before we face the next corrective move once again, right? And another reason I actually believe this may hold, right, it's also the fact that it is sitting on this green line. I know it's difficult to see, right? Okay, but it is sitting on this green line where the stock is right now. Okay, and this green line is actually the 200 weeks moving average. All right, now, so yes, I know it's trading under its 200 days, all right, but it is sitting on the 200 weeks. Yeah, okay, now, and of course, the longer time frame, right, is actually much more accurate than the shorter time frame. All right, okay, so we have to give reliance on the longer time frame outlook. All right, so the market seems, oh, the banner, sorry, Susan. Thank you for reminding me. All right, there we go. All right, now apologies for that. All right, now so as I was saying, right, the longer time frame bears more importance, right? And as of right now, right, there are multiple signs, right, that shows us why the market should bounce. Yeah, okay. Do I expect a lot out of this bounce? No. Okay, all right. Now we may potentially see it bounce to about 3,800, 3,900, right, before we see the next sell-off. Why? Because come November, right, come the start of next month, right, the Fed have no choice but to raise another round of interest rate hikes. Now, again, that's going to put a damper, right, in the markets, right, because CPI numbers are still so high. Yeah, okay, they have no choice but to still take the stance, right, of rising interest rates until it is curbed, right? There is no flattening of the curve yet, right? It's not even happening, right? So they can't, put their feet off the pedal, right? They can't, right? They just have to keep their stance of increasing, right, until they see the signs of economy slowing down, right? And that is going to continue to put fear inside the market whenever there's a bounce. Yeah. All right. Now, so that's my view over here. Okay, and let's get to our trade positions now, shall we? Yeah. Okay. Now, so our current trade positions, we'll see 2 of our naked puts expire today, or rather, I should be calling them as portfolio puts. Yeah. Okay. Now, so today we'll see 2 portfolio puts, right, which will expire. Right. The first one, right, is actually sorry, our apologies. Right now, the first one is actually our AT&T $18, right, portfolio put. Yeah, okay, now, and actually, right, this position has already been assigned inside my trading account, right? So I've already been delivered the shares before expiry. So I'm perfectly fine with that. Why? Right, because I've already allocated, right, the margins required, right, to take up full cost of the share, which means 100% of the cost of the share. All right, so I've allocated for that. All right, I'm not overstretched at all. All right, so now that we've taken the stock today, right, we'll look at what we can do. Okay, now, so for this expiring position, right, or assigned position, right, we will collect all or full of the 33 cents. Why? Because I'm taking delivery of the share at this price, which is $18. Right, so this option would have considered expiring worthless. Yeah, okay, all right. All the value is into my pocket right now. Yeah, okay, now, so I paid $18 for a share. All right, and what I'm going to do today is actually I'm going to start creating cash flows. All right, now, so let's go have a look. Right now, AT&T actually delivered better than expected earnings. Right, and we saw a good gap up over here. All right, it's sorry, it's surging higher. So what? Right, what I'm going to do right now is I'm going to use this move, right, to generate some cash flow for the portfolio. Right now, the whole idea, right, remember, the whole idea of our portfolio over here is to aim at cash flow, not for capital gains. All right, so if now, right, the 18 calls, right, are giving me 16 cents, all right, okay, I'm actually going to take it. All right, why? Because I actually do have 500 shares which are assigned to me right now. All right, so I'm going to go ahead and sell 5 of these call options. Okay. All right, now, so let me get there. I'm going to tag on 5 of these call options, all right, to my 500 shares, all right, to generate cash flows. All right, so I'm going to sell 5. Is it still at 16? Yep. All right, all good. Now, so I've just sold 5 of these call options. I've sold 5, all right, November 18 calls, all right, at 16 cents. All right, so this order was just filled. Now, so come 18, is it 18 November? Yes, come 18 November, right? If AT&T does go above, right, okay, $18, what happens to my trade is that my stocks, which I have right now, will get taken away from me at the price of $18. Right, and I was assigned for $18 too. So which means, right, I will not make any gains on the stock position, right? But this 16 cents that I'm collecting right now is still going to belong to me, all right? So I'm fine with that, all right? So let's go, right? Let's go egg out some cash flow for this trade position, okay? All right, so 27 5 AT&T covered calls 18 November 18. Whoa, exactly the same strike. All right, but we're doing it today on the 21st of October, 0.16. Okay, now so that's gonna put $80, right? $80 into our cash flow, right, for this stock position, and we're inching closer, 1913, right? We're almost there, right? We're almost home. Yeah. Okay, now our next assigned stock position, right, on expiry. I'm still not assigned this one, okay, but once it expires, right, I'm gonna take delivery of 200 shares. Okay, I'm gonna take delivery of 200 shares, right, of Tyson Foods, right? It's $77.50 per share. Right, so I've already allocated it over here, right, as you see. All right, so I'm zeroizing this, which pays us $149 in cash flow, right, for the month of October. Okay, all right, now, so one last one, which is eBay. All right, now eBay is an 18 November trade, but we split the cash flows into 2 months, half each month, right? So this half, right, is going to be collected right now, yeah, okay, upon expiry tonight, right? So this is also going to go out. Now, so that will set our official cash flow collection for the month of October at 2,273, right? And we have just hit, right, our monthly cash flow target. Is this 5? This is the 5th month in a row. Yeah, okay, is it the 5th or the 6th? Let's calculate. 1, 2, 3, 4, 5, 6. This is month 6, ladies and gentlemen. Right, we've hit our cash flow target 6 months in a row, right, starting in the month of May. Yeah, is it starting in the month of May? Yes, starting in the month of May, right, where market collapsed, right, and market is still down. Yeah, okay, but we've hit our goal consistently, right? So that's a good point over here. That's a positive to take away. And I just want to show you where we stand at the moment, right? Even after assignment, right, of all the positions, okay? Now, all the deposits are gone, and they're all allocated right now into this month. Okay, all right, now, this should be 0. This should be 0, right? Because they're covered calls, right? So they don't require any margin. Okay, all right, looky look. Right now, so even after the stock assignments, right, okay, taking 100% cost, right, onto my portfolio, right now, okay, right now at this moment, right, my portfolio demand, right, in terms of cash, right, is actually $132,000, right? It's $132,000, and okay, for our net, okay, portfolio cash flow, right, or portfolio capital, right, we can actually now add on this month, right, which puts us right at 114,000. All right, okay, now so our portfolio total demand, okay, it's about 132,000. Yeah, okay, so how much over are we? How much over allocated are we? I think it's this one. Is it? No. I'm sorry if I make you stop. All right, let's do it. All right, $132,000, right, divided by the current capital. All right, so convert this to percentage. Okay, now, so I'm about 116%, all right, of my portfolio capital, right? And that's perfect. Sorry, that's perfectly fine, right? Why? Because for those of you who have joined me without fail every single week, all right, you realize that I've said this to you, right? If my portfolio was entirely into stocks, right, the brokerage platform will actually allow me, all right, a total capital of 228,000. Let's round it off to 230,000. All right, okay, they will give me up to 230,000 to actually buy and hold stocks. Yeah, okay, now, of course, this is called the margin facility. Right now, this is my maximum margin dollars, right? But, okay, even after the assignment at the moment, right, my total exposure, right, is actually sitting at $132,000, right? So that's actually perfectly fine, right? I know some of you are going to ask me, but Terence, right, what if, right, all the remaining positions, right, all these put option positions that you still have, right, what if they also end up getting assigned, right? Now, so let's take an assumption over here, right, that if all these positions were assigned, right? How much is this going to be demanded on my entire portfolio? Shall we? Now, so I'm going to do this. All right, this total amount. Right? Okay, now, so even if all my remaining portfolio put positions are assigned into stocks and I allocate 100% to owning the entire stock position, right? Okay, my portfolio would demand a net capital of $150,000, right? And remember, okay, I will be allowed up to 230,000. Okay, and with all my trades, if they convert into shares, okay, I will need only a total of 150,000. So I've still got a leeway or buffer of $80,000, right, that I can play around with. Okay, so even if you're thinking, Terence, what if some stocks severely drop? Yeah, okay, I've got that buffer over there, right? And many of these stocks that I've traded are already traded at very severely severely undervalued prices. And if now they're trading lower, it just means that they're even more severely undervalued. So there's going to be very limited downside. There's going to be very limited downside in terms of what I see versus the potential upside. Yeah, okay, so this is always about, okay, being a very frugal, right, and fruitful, right, option seller, right? Okay, always keep watch of your capital, right? Never ever give a chance for the market to ever end up busting your account, because that's the quickest way, right, for any option seller, right, to kill their career. Yeah, okay, so this is something I've learned, right, the hard way many times, and something I really need to pinpoint, right, to you, right, that one should never trade more than what they can stomach, right, especially as an option seller, right, okay, because, right, you need to watch your dollars, yeah, but if you do it this way, right, we will be allowed the little bit of leverage to achieve more, to do more, but at the same time, yeah, okay, we're still keeping our own safety lines in check, yeah. So I hope I managed to stress this point upon you. Yeah, okay, and yeah, pretty much. Right, Chris, I apologize, I just saw your message. All right, okay, now, and my AT&T has been assigned. Yeah, okay, my AT&T has been assigned. So that's why today I'm adding the sell call options. Yeah, okay. All right, now if you've not been assigned yet, okay, you can do this on Monday, okay, after you've got the assignment. Yeah, okay, but simply because mine is already held into stocks, right? So I can already begin to add the call options to it. Yeah. Okay. So Chris, I hope I answered your question. And all right, with the remaining of our positions, right, there's really not much else that we can do. Intel is still down. Verizon is still down. Right. ANF, right, is sitting tight. Right, sitting tight. Now let's go through them very quickly. All right. So we have ANF. ANF is coming close. All right, we are at 1672 right now. Yeah, okay, and that will put our 18 put option at about $2. Yeah. Okay, but we have a covered call right now. Okay, so we're still sitting on it. Yeah. All right, AT&T we covered and tackled that today. TSN will be assigned today. Yeah. Okay, when market closes, our next one will be eBay. Right, so eBay is actually sitting fine, all right, because we're at 37.38, all right, and we have the, what positions do we have? We have the 35 puts, which is worth about $1.10 today, all right. We sold it at 134, right? It's worth $1.10, right? So we're still fine, all right. I'm gonna hang on to this position. Yeah, I still believe in it. Yeah, our next one over here is KSS, all right. So for KSS, we did a $30 put option. All right, and where's KSS sitting right now? All right, sitting fine. All right, we are 28.29. All right, our next one is gold. Sorry. All right, which is Barack Gold, $15 put option. Where's Barack Gold now? Close enough to 15. All right, so we're sitting fine on that as well. Sorry. Our next position is HBI, a $9 put option. Right, and HBI is sitting at about $7. All right, so we're still hanging on to that. All right, Pfizer. All right, now we've got a Pfizer which we moved to 18 November, $45 put option. All right, and Pfizer is now trading close enough. Pfizer had a big update today. All right, it's going close to $45. All right, so we're sitting tight. All right, so the $45 put right now is costing about $190. All right, and our cash on hand for the month of November is about 90 cents. All right, so we're not too bad. Yeah, and lastly, our position in OMF. All right, so OMF, we have a $35 puts. All right, and this stock fell back lower. Okay, it fell back lower, heading into earnings. All right, so we're gonna wish for good earnings because this is a normal banking bank. All right, and recently this round of earnings, right, most banks have done well, except right if they are running a brokerage arm, right? So like Morgan Stanley, like Charles Schwab, right? Okay, those have underperformed, right? Because trading volumes have dropped, all right? Markets have not been so favorable, right? So their incomes and opening of account numbers have definitely fallen. Yeah, okay, but most banks have done well, like JP Morgan, like Goldman Sachs, all right, Bank of America. Most of them have announced better than expected earnings. All right, so I'm going to expect the same for One Main Holdings as well. Yeah, okay, now, so when the results come out, all right, if we get a good jump, right, okay, the position will be fine. Anyway, it doesn't expire to November. All right, sorry. Anyhow, it doesn't expire all the way to November. All right, so we'll be fine with that. Now, so with that, all right, I'm going to end today's portfolio cash, right, for the month of November at 1913, right, and that sets us only $83 shy. Right, I've got 4 more weeks to go, ladies and gentlemen, right, for November's expiry, and I only need to pocket another $80 over. I think I can do it. Right, I think I can do it. All right, but you can never be too sure. So anyway, stay tuned. Join me every Friday, and you'll see the end results. As I always say, right? Okay, time will tell. All right, the last month itself, many of you freaked out. Many of you were left wondering, Terence, how are we going to hit the cash flow for November? And I just proved to you again, once again, all right? The portfolio has its own way of getting things done. Yeah, okay, the market may trash at us, the market may scream at us, right? But we continue to do what we do, right? So if your philosophies are right, stand by it, right? Okay, run it through the test of times, and you know exactly what to expect, right? And that's why I'm trying to show all of you, right, during these, educational Friday sessions, which I run live, and I do all my trades on a live portfolio. Right now, so those are the contents I want to cover today. Nothing much to really shout and scream about, right? And I'm going to be happy to open up some time, right, to questions. So if you have any questions for me, all right, do start leaving them in your comments, right, so that I can help you out. Right now, so Wiki over here, all right, your question, right, can we sell the calls on AT&T now since the price is unlikely to go back? The answer is no. Right now, the answer is no because if you sell the call option right now, okay, the brokerage is actually going to take up, right, a naked call option margin on your account itself. So if you're trading on a small account, right, doing this trade will not be allowed. They're going to tell you you don't have the margins. Or, okay, all right, doing this trade, you will see a significant drop, right, okay, in the available cash that you have in your portfolio, right? So that's the reason why you don't do that. Yeah, okay, all right, now, so because, many, how do we say this? Many of you, all right, okay, are not gonna be able to stomach, all right, the margin spikes. Yeah, okay, so just wait until Monday. All right, you don't really have a choice over here. All right, Chris, thank you. All right, and EL, right, you stay at Orlando, all right, okay, nice. All right, and every day 50,000 tourists are visiting the Disney parks and causing massive jams, right? Yes, all right, but then, okay, you must also imagine, right, that many other Americans right now is shrinking their pockets. All right, okay, and Disney parks in Orlando is just one place. Right, many parts around the world, all right, may see a drop. Okay, now, so I really don't expect Disney, right, to continue to outperform, right, for a few various reasons. Okay, for a few various reasons. Number one, Disney is currently trading at 60 times earnings, and in this market, you have to consider. Right, in this market where it's coming down, people are afraid, interest rates are going up, inflation is hitting us, right? And you still have a stock that's trading at 60 times PE, right? Do you really want to go out there and buy it? Right, definitely not me, right? Not in this kind of market environments, right? So if you're keen, please go ahead, right? But I'm not keen at all, yeah? Right now, so, one easy way, right, is to pretty much compare what they did. All right, now, so the last time they expected 93.07 cents. All right, this time they don't put out expectations. All right, but I actually believe, all right, they will disappoint. I'm not too sure why, but I just believe they disappoint. Why? Because the last time around they delivered. All right, so because they delivered, the analyst is going to expect a higher level from them. Right, where else in the case of Netflix, right, Netflix didn't deliver. right? So analysts were forced to lower their expectations. You see the game of expectations, right? Now, so sometimes it's not just about right what the numbers are, right? It's about the expectations, right? Now, I actually can bring you back right to today's results. It's a very classic case, which is Verizon. Right now, if you look at Verizon numbers over here, right, Verizon delivered an actual earnings that was better than the estimate. Right, so many of you are left puzzled. Terence, why did the stock drop 6%? Right, even though the earnings was better. Simple. They missed subscribers numbers. All right, and that's what I'm trying to say. All right, okay, they just missed subscribers numbers. So even if the numbers are better, yeah, okay, subscribers numbers may still drop. So you may think that 50,000 visitors, right, may be a lot of people causing jams, may be a signal, but the analysts may actually have a higher number. All right, so if they report 50,000, it's still a miss, right, and that will cause Disney stocks to drop. Right now, so to me, right, it's just not worth paying or playing when the stock itself is already so severely overvalued. Why? Because if earnings meet your favor, that's a good thing. The stock can rise a little bit. But if earnings were to miss, because the stock is so expensive right now, can you imagine how much they can sell off the stock? Right? Because you've seen how they punish some of the very money-making stocks right now, or money-making companies. Right? They can punish it to a 10 PE. Right? And Disney is trading at 60. Right? 60. Yeah, all right. Now, so I really cannot imagine. Yeah, okay, how much downside can there be at the moment? Yeah, okay, so I'd rather stay out of this. Yeah, all right. So yeah, I hope I just provided you some old market trading traders kind of outlook to it. Yeah, all right. So there are some risks that are worth taking. There are some risks that are not. Yeah, okay, but of course I can only provide you how I look at it. All right, I can't do much more than that. Right, it is your capital after all. You make the final judgment. Yeah. 52 weeks low is not a gauge. Why? Because 52 weeks low with a high valuation doesn't mean the company is expensive. Doesn't mean the company is cheap. Right? This is where fundamentals come in. Right? And you have to understand when markets are going crazy, when markets have cheap money, it is okay to ignore fundamental valuations, but not when money is getting tighter, not when money is leaving the market. This is when valuations have an even greater importance. Yeah, okay. Now, so once again, I leave it to you, but I'm never going anywhere near this stock. Why? Because Disney, just the law of numbers itself, all right, okay, is going to see them having great difficulties of growing their earnings at anywhere near 50% even. Not talk about 60%. How about 50%? They can't even come close to that. Why? Because of their numbers. Law of large numbers. The bigger your company is, right, the harder it gets to grow your earnings numbers. Right? And they are 60 times, which means their expectations is to grow your earnings by 60 times. Do you see that happening? Do you see a 50,000 number, right, as a 60 times growth? I don't know about you, but definitely not me. Maybe 10, maybe 20% growth, but that's still going to fall short of the valuations. So I hope you do see where I'm coming from, which means if you get it right, good. You may have a small profit over there, but if you get it wrong, there's a lot of downside that can be potentially played, right? If if you think this is all, no, it's not all. Which means if you think this sell-off is significant, 120 to 99 is not. If they can smash Facebook to 50% and lower, right, that means you can expect this stock to fall to this low over here, which is 90 or even lower. Yeah, you may be seeing a new low as well. Yeah, all right. Now, so Andy, all right, I can't comment on that. Why? Because my position is fully loaded. Right, and for Western Union, let's have a look. It is at a 5.9 PE over here. Right, let's match up their earnings and make sure this is accurate. Right, so the company makes 50, 50, 64, 63. So the company makes about 110, 220, 220. Right, yeah, it's about a 5 PE. I think it's okay. Right, I think it's okay, but because I have a position in OMF, right, I won't be getting into this trade, right? And I also plus I'm fully loaded. So if you're comfortable with this stock, yeah, all right, okay, you may actually it's decent. But even if it's me, I will wait until after earnings. Right? If you're trying to establish a portfolio puts with earnings that's going to happen on the 1st of November, right, it isn't really too far. So you're better off just waiting. Yeah, right. That's another 5 cents worth of my thoughts over here. All right. So that's it, I think. Yeah, right now. So we added one position for $80 of cash flow today. Not a lot to shout about, but it brings us one step closer, right, towards our November goals. Right. And Andy, right, you're familiar with how we work. All right. So I'll leave the strike to you. Yeah. Right. Remember, right, in a portfolio put, right, if you're happy, right, to buy the share, right, at that price, that can be your strike price. Right. And if it pays you enough, then that's perfectly fine. There is no perfect strike price over here. Right. It's what you're comfortable with and how much you're getting paid. Are you happy with those amounts? Yeah. Okay. That will be your guiding light over here. Right. Especially in what we cover on these Friday sessions. Yeah. All right. Now, Young bank stock earnings report seems okay. Interest increase. Not really. Not really. All right. Why? Because banks, right, are pretty much a lending business. Most of their profits are made from loans, right? There is only up to a certain level, right, where higher interest rates benefits banks. Why? Because the higher interest rates does increase their profitability, but the higher interest rates does dampen the demand for more loans, right? So it's like a pendulum, right? So once it hits a maximum level, right, more than that is going to actually cause a negative effect. Right? Because money is just going to be too expensive. Nobody wants to borrow money anymore. Right? Can you imagine if you have to pay 8, 9, or 10% interest just to buy a home, just to finance a home? Who's going to buy a home right now? Right? Imagine if you buy, you have to pay 15% just to take a car loan. Who's going to buy a car right now? Yeah, okay. And if people don't want to buy a car or buy a home because the loans are too expensive, then the banks can't make money. Right? And if the interest rates are too high, companies are going to scale back on the amount of loans that they take. Why? Because it's expensive. Yeah, all right. And if companies don't take up these loans, then the banks can't make money as well. All right. Now, so while people always seem to say higher interest rates are good for banks, right, to only a certain extent, right, too much of a good thing can become bad. All right. That's, I hope you can associate over there. Yeah, all right. That will be the best explanation that I can give over here. Yeah. All right. Now, so I'll put a close to this week's session over here, a good, short, and sweet one. Right. And I'll be back with you next Friday. Okay. I'll be back with you next Friday for another session together with all of you. And let's see what cash flow we can create. But in the meantime, okay, I'm also glad to announce, right, that I've been re-invited, right, to the upcoming Market Insights Virtual Summit, right, for the third quarter this year, October. All right. Okay. And they're going to run an event, all right, over the next weekend. Right, and I've been given a slot, right, to share about this topic. Okay, I'm actually going to teach people who come to the session, right, an option trading hack, right, on how you can create a risk-neutral portfolio, right, okay, to actually increase your winning probability. So if you do have interest to find out how I'm going to do this, right, and how I'm going to build this portfolio, right, okay, with a small amount of capital, right, and how anyone with any investment level knowledge, right, can actually get started building this portfolio as well. Right, do join me during my session, which is on the 29th of October, right, at 1 p.m. Right, 29th of October at 1 p.m. Right, now the registration link is over here in the banner. Right, it's bit.ly/MIVS OCT October, right, 2022-TT. All right, now if this is too long for you to remember, right, you can also check it out, right, inside my Facebook page. Right, I will be making a post soon, right, over the weekend in my Facebook page with the link over there. All right, okay, so you can do so as well, right, if you have followed my personal Terence Facebook page. Okay, I will also be putting up a post, right, inside my Instagram account as well. Yeah, okay, so in the meantime, do be very careful and be very aware, right, because all of you should be aware that there are a lot of fake and spam accounts on Facebook and Instagram right now on social media, right, so do be careful. All right, if anyone messages you and they say the Terence Tan, it's definitely not me. All right, because I don't do that. I don't send out any personal messages. Yeah, okay, so as long as you receive something, it's definitely not me. All right, now, so with that, I hope I put out some guiding light to all of you. All right, and I'll see all of you come next Friday. Okay. All right, okay, ladies and gentlemen, thank you once again for your Friday night's precious time, and I'll see you once again next week. Bye bye for now. See all of you soon.